Okay, we're going to go ahead and get started. We want to welcome you. Thanks for joining us today for our construction webinar. In the webinar today, we're going to be covering a lot of questions that are concerning construction loans. And in addition to that, if you do have questions on other mortgage products or other mortgage questions, we'd be happy to work through those with you and answer those. So you can see on your screen, you can see where you can type in questions. You're welcome to type those in, and periodically through the presentation, we'll try and address those and answer for you. But for today, again, we just want to cover the construction loan specifically. If you do have other questions, you're welcome to reach out to us directly at the credit union. Our mortgage line, just so that you have a direct contact, you can reach out at 801-481-8840, and that's where you'll find our construction department, our mortgage lenders. Any of our loan officers you can reach on that direct line. So we're going to go ahead and get started on construction loans. So I'm going to have you go to the next. Why construction loans, or what are construction loans? Many of you have started the process of looking for a home and have run into problems where you can't find a home. And you may have considered building, and that's what we'd like to discuss today, our custom construction loans. Now, this doesn't pertain when you talk about buying a home from some of the big builders, Edge Homes, Henry Walker, Destination, Garbett, those type of builders. Those builders provide the construction for you, so you don't need to worry about doing a construction loan in that situation. Even though it's new construction, they provide that financing. So for today, what we're talking about is when you look at building a custom home, something that you would find the land and get with a builder, put together plans, and build a custom home. And we do offer a couple of different kinds of construction loans, one-time close and two-time close. You'll hear those referred to often. We're going to go in detail over those. So let's get started and go over the one-time close.
So with the one-time close construction option, you'll close on your construction and your long-term financing prior to starting construction. You'll only close one time. Your long-term rate will be locked up front, and then when the home is complete, your construction loan will just kind of streamline over into your long-term financing. You won't actually have to close again, and you will only pay closing costs one time.
So I'm going to stop right here and tell you I apologize. I totally did not introduce you, the presenters. So my name is Jennifer Young, and I'm in the mortgage department here with University Credit Union. And Marky Johnson is one of our loan officers, and she's joining us as well. So I apologize. That's what you get when you get live. You get mistakes. But moving forward, on the two-time close construction loan, that is exactly it. You close two different times. You close first. Once you're ready to start construction, you close on your construction loan, and that is prior to building, prior to moving any dirt, or prior to starting, you would close on your construction loan. And then once the home is 100% finished, then you would close on your long-term loan. Now, the long-term rate is subject to current rates, so you wouldn't lock that long-term rate in until you're about 30 days from the home being 100% complete in your closing. Now here at the credit union, we do offer, when you choose to go with a two-time close, we offer a 0.5% credit towards the long-term closing costs, and that's 0.5% of whatever your loan amount is back credited towards your long-term closing costs.
Okay, so now we'll get into some of the details of the construction loans. The interest rates on these loans are extremely low. Right now, the interest rate is as low as 4.24% during the time of construction, and you'll make interest-only payments during construction, so your minimum payment will stay relatively low. We do have a few different bill terms. We can do either 6, 9, or 12 months. And then we can lend, in some scenarios, up to 95% of what it's going to cost to build the home. We can do loan amounts up to $2.5 million. Some restrictions do apply with the down payment and the loan amount, so you can just get with us to go over your specific scenario, and we can give you more details on that. And then we can do construction loans on primary residence and second homes as well.
So we've given you information on a one-time close versus a two-time close, and this is just a chart that kind of goes over those comparisons. On the one time, you'll see you do close one time. Now, even though we close one time, you'll close on your construction loan and the long-term loan all at once. You'll sign all of the documents. Once the home is complete, we will have you sign a few documents just to modify from the construction to the long-term, but it won't be the full set of documents like you would on the two-time. The benefit of the one-time, the lock on the long-term rate is locked right up front, and you're locked into that rate through the course of construction and then automatically into the long-term. The loan amounts are restricted to whatever your county limits are. We wanted to address just a few of those, just to give you an idea of the county limits. Salt Lake County has a limit on the conforming rates of $600,300. Summit is a little bit higher, $636,150. Tooele has that same $600,300, and Davis is $424,100. That just gives you some ideas of what the surrounding limits are. And again, the one-time is limited to those limits. If you're going to be above those limits, then the two-time loan is going to, or the two-time construction loan is going to be better for you. And again, that you close on two different loans, so you close twice. You lock in your long-term rate once the home is about 30 days from being complete. I know it says on here when the home is complete, but about 30 days from completion is when we can lock in your long-term loan. The loan amounts can exceed those county limits, so you can go upwards of the $2.5 million. And if you do find a situation where you're going to be over that $2.5 million, we are interested in looking at those, but we would run those through our commercial lending department. So that just gives you an overview of the one-time versus the two-time. Now we want to go over the process so that you know what to expect and how the process of a construction loan is going to run. So first,
so we do require you to hire a general contractor. Even if you are licensed, you do need to hire a separate general contractor for the project.
We do require documentation the same as we would require in a normal mortgage. We're going to require that from you on a construction loan. Additionally, we're going to ask the builder to provide certain information to us. We're going to look at their license, their insurance information. We're going to make sure that they have a good standing with the state construction registry. Now that's something that's unique to Utah. Utah has a state construction registry, and all subcontractors, suppliers, builders are all required to register in order for lien rights on construction. And this is specific to construction loans, and we'll go into detail with you individually if you do have questions. That's something that's very important to be aware of and understand. Additionally, from the builder, we're going to require a cost breakdown, a set of plans, a contract with details of construction, and then also just details of the finishes. We want to make sure that we're getting all the information that is to make sure we understand what you're going to be building, give you the benefit of the finishes that you're doing and the choices that you're making.
So once we gather all of this documentation from you and your builder, we will get a preliminary loan approval from the underwriter. They'll go through everything, and then they'll let us know if there's anything else that they need for the approval, and our processing team will help gather any additional information that the underwriter requests.
We're going to stop for just a second. There are a few questions, and I want to make sure that we get those questions answered before we move forward. One of the questions is, can an unfinished basement be considered a completed home? You know what? That's a really good question. The answer is yes. If you're going to be building a home and not finishing the basement part of it, absolutely it's completed. We just look at it. They'll address that in the appraisal. The appraiser addresses how much is finished and how much is not. As long as the main level is completed, the above ground is completed, then it's considered a completed home, a finished home. So once we do the preliminary approval, then we would go through the process of ordering an appraisal and title. The title is pretty standard, but the appraisal itself is actually subject to completion, and just like what we addressed, we're going to address, the appraiser is going to go through and look at your set of plans, look at your cost breakdown, look at the contract that you have with the builder and the finishes and the quality of finishes, and appraise it subject to completion. And then when we get to the end of it, we'll order a final inspection, and they'll go back out and make sure that everything has been completed as we initially suggested or submitted to them.
Now, once we have all the documentation from you, your builder, the appraisal, the title work, we've got everything ready, the file will be sent back to the underwriter, and they'll review it one last time, and they'll issue the final loan approval, at which point your file will be transferred over to our closing department.
Once everything's completed up, then you're ready to sign on your closing documents, and that's when you go to the title company. The title company settles all of our transactions, and you'll go and sign your deed, your note, and all of the additional documentation at closing. At this time, at the closing, that's when all of the final funds are required. That's when you're required to come in with the rest of whatever your down payment and closing costs amount. And those amounts would be discussed prior to this, but this is the time when everything is settled. The title company, once everything's done, the title company will go out and inspect the property, make sure everything's ready to go, and you're ready to start construction.
Now, after we close with the title company, your loan will be funded and your construction loan will be ready to be used. Over the course of the construction, your builder will submit draws to the credit union to take out those funds from the loan for supplies that they need to build the home. And the draws are handled by our loan administration department, and your builder will work directly with them throughout this process.
So once the home is 100% complete, once you've gone through this process of all the draws and the home has been built, then you're ready at that point. Once the home has been given a certificate of occupancy from your city, we're ready to go ahead and convert over to the long-term loan. So that could be as few as a few documents if you've done a one-time close, or if you've done a two-time close, you'll sign all of the new documents for your long-term loan at this point, and that's when everything converts over, and then you'll start making your regular monthly payments.
Okay, so now we'll go through some do's and don'ts to follow during the construction process. Do check with your mortgage consultant before making any changes, and by any changes we mean changes to your credit, changes to your job and income, changes to the plans and supplies that you're using for the house. Any changes, you want to check with us before you make them. You'll also want to keep in touch with your builder during the construction process, see how things are going, make sure that they're doing the things that you discussed and had planned, and then they'll also be able to give you an idea of when the home will be complete, and we'll work with them so that we can get started on your long-term financing when you're about a month out from being complete. And do contact us with any questions that come up during the process. We are here to hold your hand and help with everything.
So we have a couple, before I go over the don'ts, we have a couple of questions that have come up that I'd like to stop and address. So one of the questions is, does the builder have to be on a list of approved contractors with you, or can he just be any licensed contractor you would choose? It's a really good question, and the answer is, yes, you can use any contractor, but we do put them through the process where we evaluate all their information. So that information that I referred to earlier, the license, the insurance, the cost breakdown, the contract, we're going to evaluate that information. We're going to ask them to provide us with financial information from them. We want to make sure that they're financially stable and secure to go through this process with you. So it can be someone that you choose, but just know that we're going to go through and ask them the similar information that we ask you. The second question that we have are construction loans used for expansion on existing homes, and I'm going to let Marky answer this.
Yeah, we can definitely use construction loans for expansion on existing homes, and not only expansion, but if you're just doing a huge renovation and gutting a home, we can definitely do construction loans. We'll gather the same things. We'll gather the plans and the cost of what it's going to cost for the expansion or the remodel, and the appraiser is able to determine a future value of the home, and we can base this loan off of that future value. It's a great question, but we can definitely do that.
Okay, the next question is, let's see, are you able to briefly summarize a lot loan and how financing the lot relates to the construction and home loan? You know what, that is a really good question. Lot loans, we do work with lot loans. Our lot loan requires 30% down, and if you, for instance, when you would need a lot loan is if you found a piece of property and you really didn't have your plans and permits or your plans and specs together and you needed that time, we would close on a lot loan, and the lot loans are structured so that you have 24 months, 2 years before it has a call on it. We do an amortization on our lot loans 15 years. And so you've got a lower payment on it, but then whatever equity you have in that lot would go towards the overall investment into the down payments, or into the property, or the project. So when you do a construction loan, you would come in and say, okay, I've closed on the lot loan, I have this much equity. We would take whatever the purchase price of the land was, give you the benefit of that equity, and the overall price of the home, add those two together, and that would be your total overall price. The investment that you've already got into the lot would be your down payment, and if you need any additional, we would discuss with you at that point. A lot of times that 30% is sufficient. You may need a little bit more, but a lot of times that's sufficient to cover your overall down payment requirement.
Yeah, and then your first draw from your construction loan would pay off that lot loan. So as long as you build within 2 years, you'll pay that loan off before it becomes due. So we'll combine and it will turn into just one loan at that point.
Hopefully that answers your questions. And you know what? If you have another question, type it in and we'll get to those.
Great question.
That is a really good question. So some of the don'ts. We want to make sure that you understand construction loans are kind of tricky. And you need to know that it's really important that no construction starts, nothing starts on the property before you close on your construction loan. So don't go out and dig around. The contractor doesn't need to start excavation before. Don't have dirt delivered. We have a lot of people that run into different things. They've had dirt delivered. Maybe they need some extra dirt on the lot and they got a good deal. Somebody needed to dump and they've dumped dirt on. All of those things can affect the ability on a construction loan. We need to make sure that you understand clearly, don't start anything on construction, on the land, before you get your construction loan in place. Number 2 is don't incur any new debt or increase your current debt through the construction. It's really difficult when you get an opportunity, especially new construction, if you go into one of the local stores, Home Depot or Lowe's or somewhere, and they say, open an account and get a discount, or open an account and you don't have to make payments on it for 6 months or whatever, interest only. And all of those things can affect your ability to qualify. So it's really important that don't change your debt structure from what you originally started at or approved at. And if things come up, call your loan officer and discuss. It doesn't mean that you won't qualify, but it means that it could. And we want to make sure and protect and help protect you through that. No change in income. So if you think that you might be changing jobs, do it before we get the construction loan in place. Or if you think that if something comes up, just reach out to your loan officer and keep that open communication so that they can help you through that process and make sure that there's nothing that's going to affect your ability to qualify for that long-term construction loan. And then if anything changes on the home itself, if you get into construction and you decide that you want to change some things, make sure and keep us in the loop. Make sure and communicate that to us so that we know what's going on and that we can help you through getting credit for those changes. We want to make sure that the appraiser's involved. If there's things that are going to increase your value or decrease your value, we need to know about those things so that we can make those changes with the appraiser and give you full credit. There are a couple more questions, and I'm going to have you take that one.
Yeah, so this question is, could you please state the percentage down payment required on the home building loan? So we can do these construction loans with as little as 5% down. There are some restrictions, so we can do 5% down based on your county loan limit. So just to reiterate some of those loan limits, Salt Lake County, the loan limit is $600,300. Davis and Utah County are $424,100. Summit County is $636,150. So as long as you're staying within these limits, we could do as little as 5% down. If you exceed these limits, we would need at least 20% down.
That's a good question.
Great question. And now we're at a point that we can open up for more questions. So go ahead and type them in. This is a lot to take in. So let us know what we went through too fast or what questions have come up. Some questions that we get a lot are, what if our cost runs over on the construction? You go in with a plan and a cost, but then I would say 99% of the time costs do run over. You want to make changes and find something that you like better. It's a little bit more expensive. So the credit union does try to help anticipate these overruns when we begin. So we do require a 5% contingency with the cost that we get from the builder. So we do allow for a 5% overrun. Now, if you were to go over that 5%, then you would need to have those funds available when the home is complete to finish paying for those.
One question that we get often is credit scores. Credit is a big deal, and with new construction, it's the same way. Credit scores, our minimum credit score that we require is 640. The lower the credit score, the more expensive things are going to be. You're going to find that the lower credit score, if you do a minimum down payment, you will have mortgage insurance, and so the mortgage insurance is going to be higher. So credit scores, you should have a goal of keeping your credit score somewhere around that 700 or higher mark to get the very best rates and the very best terms. But we will go down as low as 640 on a FICO score. Okay, we're just going to watch and see if there's a few more questions come in.
And another thing to point out, back to the do's and don'ts, Jennifer had mentioned don't begin construction, don't touch your lot or anything. That kind of goes along with if you're building onto a home or doing an extensive remodel. Definitely get this construction financing in place before you begin the remodel or the addition. We can't come into projects like that halfway through. Sometimes people start and then they run out of money and they're like, oh no, I need help, but we can't come in halfway through a project. So it's really important, if you're thinking of doing a huge project like that, to have a plan and have this financing in place prior to that. Okay, so we have a question, are credit scores for couples combined or looked at individually? That's a great question. So we pull all 3 credit scores for each borrower on the loan, and we look at the 2 middle scores, so the middle score for each borrower, and everything is based off of the lower of the 2 middle credit scores. So they're not combined, they're not average necessarily, but we do look at each individual's middle score and base it off of the lowest.
It's a good question. So I'm going to just remind you again, I know that since you're attending the webinar, you know where our website is, but if you go to our website, you can hover over the home loan section and find, but I'll just let you know, again, you can contact us at the 801-481-8840. That rings directly at each of the desks of the mortgage loan officers, and we can help you through the process. Thank you again. I know that there are a few more questions, so we're going to hang out a little bit, but I just want to thank you before I lose any of you. I just want to thank you again for attending and joining us today. We're going to be doing this again at 2:30 today, so if you missed some information, we'll do 2 things. We're going to be presenting again at 2:30, and we're also going to post this onto our YouTube channel so that you'll be able to go back and listen to this again and reference some of the information. One of the questions that came up is, can a construction consultant be used in place of a general contractor? You know, we typically would tell you the quick answer is no. We really like to have a general contractor in place. Now, I say that, and there are some that we've worked with. If you are a licensed general contractor, but you're not actively involved in construction, but you want to use your license and hire a superintendent or hire a consultant, we want to look at it on a case-by-case basis. I wouldn't tell you that we go after those, but we would definitely like to talk to you and see what your experience is and see why you would want to go that direction instead of hiring a general contractor. So the quick answer is no, but the overall is come and talk to us. Let us look at your scenario and see if we can't help you through the process. Okay, if there are no other questions, we'll go ahead and finish this up. And just again, a reminder that if you do have questions, we're happy to help you through. This is something that we love. We love doing construction, new construction. It's something that we're excited about, and we want to help you through the process. So if you have questions, reach out and let us know. Thanks again for joining us.